So, unlike some Monday mornings when we come in and there's been more bombs dropped or something's, going sideways and we gap way lower, it does appear we're going to gap up this morning, which is a nice little bit of relief after that sell-off we had on Friday. So, if you're brand new, let me know if this is your first time joining us for the live session. I want to both walk through what we're seeing in the current market as well as kind of help you identify what's leading the market, what we want to buy, where we want to buy it, and kind of show you a methodical process that you can follow for identifying these winning stocks and putting yourself in front of it. Okay. So when we take a quick look at the market health indicator, simply showing us, thank you for that, showing us what's leading the market. We have seen semiconductors as the number one performer in April, May, and in a lot of June, but that is now beginning to cool off. So if we looked at this 2 weeks ago, semiconductors were number one across all our 9, 12, 6, 3 month time periods, but it was also the top of the 2 and the 1 month. It has now fallen off. We've seen the semiconductors pull back some, which is good. That's what you need. You don't want them to get too extended. But we're starting to see strength in biotech and airlines and cybersecurity, which is coming up off the lows and some of these other areas. So we're going to walk through and see what opportunities we can find there. And if we take a look at the semiconductors ETF, you'll see really quickly why it is no longer leading. I mean, this is the entire semiconductor sector. And it went from the end of March to mid-June up 108%. And these are big companies. This is AMD and Intel and NVIDIA and Micron and these hundreds of billions, some of them trillion-dollar companies that doubled on average in 84 days. So huge rally there that is unsustainable. Not saying they're going to crash, but what I'm saying is we need them to reset. We need that action to be absorbed. We need it to base again before it can run further. And one of the things you'll learn about kind of the way I like to trade and invest is we like to buy stocks coming out of consolidations. Okay. Stocks generally do not just do this. They typically kind of run this way, right? And that's good. That's healthy. That's what a healthy stock does, because what you'll get, and we'll just look at, let's take like an NVIDIA or something, and we'll go back to a weekly chart and just look back at what's been an historic run the last few years. You get these big accelerations, and then it kind of absorbs and consolidates. It makes another big run. It absorbs and consolidates, makes a big run. This was the 2022 bear market, so everything went down. It then took off again from 15 all the way to 30, consolidates for about 6 weeks, makes a big run, consolidates. And this is the process that typically follows, right? You get these runs followed by consolidations and runs. It's this stair-stepping pattern, right, that stocks take. And so my goal is to find these windows when it's breaking out from consolidation. All right, when we have the odds in our favor. And I want to buy in here as it's breaking out. I just want to have this little run from 17 to 20 or 30. I want to buy in here when it's breaking out, or in here. Because that's where the quick and fast money's made. I'm not looking for stocks I can hold for 20 years. Okay? I'm not trying to take the Warren Buffett route and buy stocks in the 70s. I'm still holding in 1926. I'm looking for stocks that are going to make a decent run over the next kind of 2 to 10 weeks, right? And so the way to do that is to find these stocks coming out of consolidation. And if we look at any given stock, let me find some. Well, here's what we did in Micron. And you'll see it a little clearer if I put it in logarithmic scale. But notice how this stock makes a huge run from 220 to 450. That's a double, okay, in like 6 weeks. It then needs to consolidate. It needs to absorb that selling. The people who've doubled their money are going to be selling. The people who don't want to pay too much are going to start shorting. You need to get that supply out of the way. Then we went in here to this when we started the war with Iran, everything sold off. We came back, tucked in nicely, and then bought the breakout here at 500 before it ran to 1,000. And you're always going to have more of an advantage buying a stock coming out of a consolidation than one that's extended. Because if you look at, let's take Micron, somebody mentioned, right? Well, this is Micron. Let's take some of the others. AMD, maybe, right? So notice how here it's coming out of 2 or 3 months of consolidation where it's kind of chopped around and absorbed supply and bouncing around, and then it breaks out. Then it goes to price discovery. Well, once it's gone from 200 to 400 or 500, the odds of a pullback increase substantially. So just buying in here going, it's never going to stop. Well, it does. In fact, it pulls back 13, 14%. It went higher, pulled back again, chopping around again. So this is not where we want to own it. I don't want to own it in here in the choppy period. I want to own it here in the acceleration. So my goal of today is to show you how to do that, right? To show you how to identify when stocks have a high likelihood of making a big and fast gain. And there's kind of a 3-step process to doing this. One is we want to find the leading group. So let me just type this out. Step one, identify the leading group. All right. Why is this important? Well, stocks tend to move in groups, okay? There's a reason that AMD and Micron and NVIDIA and Intel all went up 50, 100, 150% the last 3 months. The move was in semis. That was the group move. You see, what moves stocks is big institutions. It is Goldman Sachs. It is the Magellan Fund. It is the New York City Pension Fund and endowments and insurance funds, the big multi-billion-dollar shops. They're what move stocks, and they don't pick stocks like you and I. They're not day trading. They're not swing trading. They're putting money into what they think is going to be the biggest opportunity of the next few months or quarters or years. And so their research is all fundamental. They're saying, okay, well, based on the AI development and the move toward agentic AI and how this is going to play out and the demand and blah, 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 we think the semiconductor area is where the opportunity is. So they buy them all. Or they say, hey, the big bottleneck is power. The grid can't handle it. The data centers are sucking all this juice. We need more. Wind won't work. Solar's footprint's too big. It's probably going to be nuclear. We got President Trump earmarking billions toward nuclear plants. We have new technology breakthroughs in the nuclear sector. It's small, it's renewable, it's clean. That's going to be the way they power all these data centers. So they buy all the nuclear stock. They buy SMR, they buy NuScale Power, they buy GE Vernova, etc. And so what you'll find is that 50% of a stock's move is tied directly to the group or sector they are in. This has been a great rally the last 3 months. But if you were buying real estate and pharmaceuticals and areas that weren't leading, you didn't make big money. So you want to identify the leading group. That's step one, right? Step two, top stocks in that group. Think about what kind of stocks these institutions are buying. They're not buying little $2 penny stocks. They're not buying little off-the-radar names. They're managing billions and billions of dollars. If the whole company is only worth $300 million, they're only going to be able to get $4 or $5 million in it. That doesn't move the needle. So they're going for the big leading stocks, the ones generally the largest companies, the ones with the best growth, the best earnings, the best prospects for the future. So when we have the leading group, we just want to find the big 10 or 15 stocks in it. And it's very easy to do. You can Google this. You can Google the ETF, and it'll show all their holdings and just find the top 10 or 20. And then number 3, identify a high probability buy point. Okay? Where are we going to buy this stock? And there's 2 ways to buy stocks. Actually, there's 3. Number 1 is just buy it, cross your fingers, and hope. All right? I wouldn't recommend that. Number two is a breakout. I'm going to walk you through that setup, but it means the stock, as I showed you, has been consolidating. It's chopping around. It's done its price acceptance. It's absorbed a supply, and now it's ready to make a run. That's a breakout. Two is a pullback. It's had a good run. It's come back, and it's fallen to a place where buyers are likely to step into that stock. Okay. So breakouts and pullbacks. Breakout going into new highs, about to run higher. Pullback, it's setting down. It's come back to a place where buyers are going to be. Good place to get in. That's it. That's all there is to it. Don't overcomplicate this. I mean, we want a bull market. All this is going to be a hell of a lot harder. Stocks are falling out of the sky, but you'll know if it's a bull market. It's real easy to identify a bull market. Just pull up a chart of the S&P 500 and say, is it trending up or down? Well, clearly it's trending up. I mean, we're within 2% of all-time highs. If this was a bear market, it'd be looking like this. Okay? So we got a bull market. Great. How do we identify the leading groups? Well, one of the easiest things to do is just look at what's going up the most. If all the big funds, if all the big Wall Street shops are buying semiconductors, if they're all buying biotech or airlines or solar or whatever the heck it is, those areas are going to be rising faster than the rest. And so if we can see which areas are consistently outperforming the market or rising up the ranks and beginning to outperform, we know where to focus. So biotech started to be very strong. Notice how it was one of the top performing areas over the last 3 months, over the last 6 months, over the last 9 months. It's now up here number 3 in the last 2 months, number 1 in the last 1 month. That's an area I want to focus on. Out of 40 sectors and subsectors that this indicator tracks, this one consistently ranks in the top 7. That's an area I want to focus on. What else is doing well? Well, it's a little choppy, but quantum computing is trying to come up. Notice it's beginning to climb up the ranks. Right? And it's pulling back a little over the current 1 month, which is good. We wanted to set a base. All right? Semis have been very well. I think a lot of them are extended, but if they can set up again, we'll do that. Now, people asking about this chart, we give this away for free to all of our Black Ops members. So if you are not already a member, click the link in the description. We've even got a QR code down in the corner if you want to scan it. The link is tradewithross.com. And it's $5 for the entire year, no strings. We'll do these sessions live once a week, every Monday. Right now, we're doing them on YouTube. I may be forced to go back to Zoom doing those, in which case only members will be able to join. We have another live session every Thursday with my analyst. Those are over Zoom for members only. We'll give you lifetime access to this industry strength indicator. You can put on your TradingView charts, and you can look at the leading stocks over any time period, the best ones, the worst ones. Really customize this to give you a nice little dashboard of what's leading. You'll also get my weekly newsletter that comes to your inbox every single Friday, bonus reports, access to my team, a ton of stuff. So if you're already a member and do not have this, Karen, let me show you how to get that. I'm going to put this link here. Actually, Derek, I'm going to send it to you. If you could put this link in there. This is what the page is going to look like. I'm going to put this in the chat. Hold on, let me message this to him. Derek, type that in the chat if you would. Click that link. You're going to go right to here. Just put in the email address you signed up with and your TradingView username and hit submit. Your TradingView username, you're just going to hit up here. See, mine is Ross Givens right there in the top left. Just put that and we'll authorize you for it. And then all you've got to do is come hit indicators. You're going to type in TA industry strength. And notice it's got a little lock there on it. As long as you're a member and we give you access, you can add it to your charts and you'll have that for life. Okay? So we got a couple areas we want to focus on. Biotechs, quantum, insurance. I don't think that's a safety play. I'm going to ignore that one. And we're going to look through these stocks, see if we can find some this morning, okay? Airlines, maybe. I think they're going to be extended, but we'll take a look. But you just want to find two, three, four areas showing strength, um, and focus there. And then how do we find a good buy point for that stock? Well, let me show you what this looks like. And let's just look at gold. We'll go back and yeah, gold's not doing great. Let's see. Let me show you it. Okay, perfect. This is what I want to see. All right. I'm going to show you the pattern you're going to use for a breakout. And I'm going to teach you this on a perfect example. We're going to look at a lot of others today that maybe are not perfect, but you'll get the idea. Okay, let me turn the moving averages off, turn the volume off, just make this nice and clean. All right, this is what we want to see. You're looking for a pattern that looks something like this. And what's happening here is the supply is being sucked out of the stock. We want to buy it here when it does this. Okay. What's happening here? And I know some of you have seen this 100 times, but if you're new, burn this image into your head. Here's what's happening. When stocks get extended, they're up 50, 100, 30, whatever percent. That shows you the demand is there, right? This initial sign. And that's what we want. We want the stocks in demand. The stock market is an auction, no different than the housing market or eBay or Rare Beanie Babies. It is supply and demand. It is buyers and sellers. If there's more demand and supply, stocks go up. If there's more supply than demand, they go down. Don't overcomplicate this, okay? Why is demand high? Well, the earnings are good, the sales are good, the forecasts are good, whatever. But forget about all that. We're talking about how it actually functions, all right? So our goal is to identify these points where demand is very high, but supply is very low. Everybody wants it, but there's not enough to go around, right? And so this is why this pattern is important. After a big run up like this, after stocks made a big move higher, this is gold, but it's the same with a stock or Bitcoin or anything else. After this, there's a lot of pent up supply. People want to take their profits. And when they do, the selling overwhelms the buying and it pushes back. Now, if the stock is truly in demand, if these big institutions or buyers are consistently buying day after day, week after week, if they're trying to build up a multi-million or billion share position, they're going to take advantage of that dip and they're going to buy it back up, right? You then get another wave of selling where either they are sending spoofing orders to manipulate, whether they're trying to run stops, whether it's people who saw it go to 4,000 and pull back and then, oh, I get a second chance to sell at the high, whatever it may be, it pulls back again. And like the last time, the institutions take advantage and buy it up. The next pullback is even shallower. The next pullback is tiny. And it forms this, what I call this shallowing base pattern. And the reason these pullbacks are getting smaller and smaller each time is that there are fewer and fewer sellers in each wave. That was 11%. That was 6. This one was only about 2.5. This one was more like 1.5. And the shallowing, the fact that these dips are getting smaller and smaller was letting you know there are fewer and fewer and fewer shares to buy. They are sucking the supply out of the stock. If your job is to buy up, 100 million ounces of gold or 100 million shares of his stock, you're going to buy and buy and buy and buy until eventually there's no more available at that price. Nobody else will sell to you at 4,200 or 4,300. You've gobbled up all the supply that's out there until you reach a point where if you want more, you got to pay up. And that's what allows these to run very quickly like this. It's not that suddenly everybody wanted it. It's that same amount of demand met a much smaller pool of supply, and that's what let it go up so very quickly. And if you look at any stock that's made a big run, and I'm not trying to cherry pick here, I'm just telling you, any stock's made a big run during that initial phase, you saw this over and over again. And if we go back here and look at NVIDIA back in 2023, you'll see the exact same thing. See how it made this big run where it went from, what was this, 15 to 50? It then starts to shallow, got a little deep, comes in, starts to tighten, consolidate. That's the supply being sucked out. That's the big shops buying and buying and buying until there are no more $45 or $50 shares of Nvidia. They've bought up all the float they can. Once it breaks through, the supply is cleared, and now it's free to run higher. That's exactly what it does. And then what do you know? It goes into the same pattern again. It runs from 50 to 100. It then stalls a little. There's the initial sell-off. It comes in, it shallows, it tightens, it breaks out, and it runs again. And you'll typically see this form several times. And in fact, it formed again here and just finally failed in early 2025. But same idea, coming in, shallowing, absorbing, breaks out here at 130, runs to 150, and then just kind of fizzled out. And you can go back and look at any of the big movers. SanDisk, for example, which has been an absolute monster this year. And if you put this thing in logarithmic scale, you'll see these. See the run over here? Look at how it started out. Are you seeing that pattern? It IPO'd here in 2025. Sell-off comes in, shallows, tightens up. There's the breakout at 50, runs to 300. Does it again, right? Breakout, run. This one was a little sloppier because of the war. It was coming in. We start to go to war with Iran, sells off. But look how quick it comes back, tightens up, breaks out again here at around 750, and runs to 2,500. So this is what a breakout looks like, okay? Now, a pullback is obviously the opposite. Let me see if I can find some here. Nvidia, for example, would be a good pullback buy now. So this one's not exactly perfect, but you can see how you had this consolidation period on in here. There's the war sell-off, comes in, finally breaks out, and then it's pulling back to that area that was resistance, right? Resistance, resistance, resistance. Can't get above it. Once it does, look how it runs, pulls back, and this area becomes support. And likely to be support again. Not a guarantee. It could fall further, but if it's going to bounce, this is where it should do it. Off of the previous breakout area or off of a big moving average, perhaps. Right now, it's sitting on its 200-day moving average. That's do or die time. It either should bounce or not, or roll over. Take a stock like Apple. You'll notice a similar pattern. Now, look at the opportunities we saw within here, okay? I'm going to break this thing down. So, here's how this would have played out for me. Big run up. There's your shallowing, your consolidation. It's coming in. It breaks out. It comes up, pulls back, fails. Rolls over. Okay, it's dead until it comes back. Down below the 200. And then what happened in here? Well, same shallowing consolidation off the lows. It has to absorb that supply. We have to get through the sellers before stock can go higher. Here's the breakout in Apple from 220 to 290. It's a pretty big move for a $3 trillion company. It then goes and consolidates again. It has to absorb that move. This one got a little sloppy, was coming in here. Probably would have done this. But what happened right here? Well, we decided to go with a war with Iran. Okay, just got to keep everything in context. So it's getting ready. We go to war with Iran. It sells off like everything else, but then rips back up, tightens nicely. There's your breakout. Goes from 280 to 320. And then look at where the pullback happened. Whoops. Look at the pullback. If we just extend this line out, see how it came right back to here, to that previous breakout area, and bounced hard off of that. That's your pullback. And I like to use previous breakout areas. You can use moving averages. Some stocks respect these better than others. So For example, if we look at like what's one of those stocks we looked at, SanDisk, which has been a monster. This stock, for the most part, and most stocks in stage twos will do this, has held this 50-day moving average right here. This one right here is the 50-day. Any pullback to that 50-day moving average was a pretty darn good buy. In fact, this one got pretty close last week on Thursday. Okay. So there's more to it, right? There's earnings growth, there's sales growth, there's rotation, there's forced buying activity, et cetera. But at the end of the day, it's not any more complicated than this. Now, how many indicators have we used in the last 26 minutes? Maybe a moving average or two. We only referenced that once. You don't need them. Okay. Your job as a trader or investor is not to guess or forecast. Your job is simply to interpret. The chart will tell you everything you need to know. It will put the odds in your favor. It'll tell you what's in demand and what's not. It'll tell you what they're buying and what they're not buying. And look, again, don't overcomplicate this, okay? If I buy SanDisk, I might buy 100 shares, which is 18 grand. Maybe I'll have 1,000 shares, 180. That's a drop in a bucket to this stock. This company is worth $258 billion. Look at this down here. This is my volume indicator. It's free as well if you just search Ross Givens volume. Look at the average dollar volume. This stock sees $21 billion per day of average trading volume. You and I aren't going to move it, okay? Unless Zuckerberg is sitting here watching this, you're not going to move this stock. So who is moving it? The big, massive firms. The ETFs, the endowments, the Kathy Woods, even though she's a complete moron, the Warren Buffetts, the Goldman Sachses, they're the ones moving stocks. They're the only ones that can move a stock that sees $20 billion a day in volume. So whatever they're buying is going to go up. What they're selling is going to go down. Hard stop. Don't try to outsmart them. Just interpret what they're doing. That's where your edge comes from. What is the up-down ratio? The up-down ratio in that volume indicator shows you how much volume there's been over the last rolling 20 days on up days versus down days. And this indicator is free, by the way. Just go in here and search Ross Givens volume. There it is. And I've put all this out in here. I had my software engineer brother code this. And it tells you what the pocket pivots are, the moving average, how it flags the highest up volume in a year, the up-down stuff. It's just a quick little reference tool that I like. Questions about any of this before we proceed? How can I get this chart? This is just TradingView. I think we have links when you join our Black Ops service if you want to just take my entire chart layout. So, for example, just take SanDisk here. If I put this link in the chat, let me see if it pops up here. There it is. Can you see that in the chat box? If you click that link, here's what it's going to do. It's going to take you to TradingView. It's going to pull up that exact chart layout, and you can just come in here and save it, and then update it as you want. Can we get a cheat sheet, brother-in-law? I don't think I'm your brother-in-law, but yeah, we can probably work something out for that. All right. Any update on Jack in the Box? Yeah, we are set to gap down a little bit lower. I have not sold any of my shares here of Jack in the Box. What are we up? Let's see. Around $9,700 on this one. I do have a stop at break even, just so you know. When you get up 20, 25% in a couple of days, right or wrong, I will not let that turn into a loss. So I've got my stop sitting here at break even. but I am still long this stock. Now, this is a good lesson what we just covered. Do you see the pattern and why I like this thing to move above 14,000 or above $14 a share? Do you see that exact same shallowing pattern in this stock coming off the lows? Now, this was a $110 stock 2 years ago, 3 years ago. It has been getting murdered ever since. I've never bought it on the way down, but look what happened here. It comes in, it shallows, it consolidates, the move tightens up. There's the breakout. Makes sense? And we're up 24% in the last week on this, right? That's the breakout. Now, is it a surprise it stopped at 17? No, because, well, the last place it found any kind of acceptance was right in here. So just think about what's happening. All the people who bought here at the end of February at 17 bucks have been massively underwater. So when it comes back to their price, what are they doing? I'm going to get out of break even. That's why it's stalling here. Where's the next target? It's probably going right up here to around 22. The last place there's supply. If we can clear through there, we're probably on the way to 40. Just supply and demand. Nothing overcomplicated. Now, this one has a few other things going for it. For one thing, there's a turnaround going on. This company, as we know, has not been the go-to fast food chain, but they brought in a new CEO. They brought in the guy who saved Taco Bell. So he's there trying to turn this company around. That's a good sign. There's also massive short interest, somewhere between 35 and 38% short interest. And when everybody is short a stock, I mean, the funds are betting on it to go lower, if it starts to go against them, you have the ability or the possibility of a short squeeze. A short squeeze is when they're betting on it short. It starts going against them. They start taking big losses. They have to get out of that stock. And to get out of a short position, you have to buy the stock back. Short selling is you borrow it from a broker, you sell it on the market, hoping the price goes down, you buy it back cheaper, return those shares, and catch a profit. So when the opposite happens and it starts going up, they're going to get out because their losses get bigger the higher the stock goes. And so when they get out and they have to buy, that's more buying coming into the stock, and it squeezes it and causes parabolic move. That's what happened with GameStop back in 2021. And so it came to my attention because there is a board on the Wall Street Bets board. There's a bunch of articles about Jack in the Box being potentially the new meme stock. So I started watching it. I wouldn't just buy it because it's on a Reddit forum. But I dug into it, and it looks pretty good, and the short interest is high, and the bottoming formation was happening. So I started buying here at 13, added on, and broke through 14, and it's turned out pretty well since. But look at the $14 level. Do you see how this was the final support on the way down? That quickly became resistance, 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 resistance. And if this thing pulls back, that hopefully will be support again. My hope is that it doesn't pull back and just pushes higher. Outlook dropped to 137. Yeah, I think the run is, at least I took mine in Outlook. Now, Outlook is one we bought on a pattern called a high tight flag. It's very similar to that shallowing breakout pattern I've been showing you, only it's for much faster moving stocks. So what you're dealing with here is not a stock that was up 30 or 40% the last month. It was a stock that was up 330% the last week. Okay, that is a powerful move. And so the high tight flag says, okay, it makes this little, kind of a channel pullback here. You buy when it breaks out. And we did very well. I mean, bought it here, went up 130% in like 2 weeks. I don't let 130% 2-week gains go away. And you'll learn this about me. I'm not married to these stocks, folks. I don't care how good the company is. There is nothing I have enough conviction in to hold regardless of price. I know there's probably some of you diamond hands Bitcoin guys out there. I'll never be one of them. There's nothing I believe in that strongly. I'm just riding the trend. So when I get up this big, I mean, I'm out of Outlook now. big run. I'm tightening a stop. I'm tightening a stop. Like I'm out on this pullback. Now, very good possibility it flags and runs again. Could set up a brand new trade. Vera was another one. Wow, I don't know what that shakeout move was on Tuesday. This thing's right back here to 43. A good deal, Kyle. Glad to hear it. If I looked at Centrus, so Centrus Energy, which has some real dominance in terms of the company and the uranium space and nuclear and all the licenses they have. I like the story, but does anything about the stock chart tell me it's going higher? Not yet. Instead of or higher lows and tightening up toward the top, we're kind of getting the opposite. Lower lows and lower lows and lower highs and lower highs. So it's currently from a technical standpoint not showing a push higher, right? PENG, yeah, looks great. I mean, we talked about this one a while back. It made a huge move, but what period are we in now? Well, it's in kind of a consolidation period, right? And there's a lot of times you're going to look at a stock like I don't know what it's going to do next. I can't really tell. I'm only looking for periods where I have an actual edge. Only looking for buy points where it looks like the stock's getting ready to explode. And so, what I want to see is this thing kind of tightening up here. Not saying it's going to go lower. It doesn't look like it's going to break down. It's just we're still dipping in here. And think about it this way. If a stock is being bought in mass by a big shop, okay, if they're trying to build 50 or 100 or 200 million share position, they're buying this thing every day, every week to do that. They're going to be gobbling up the supply, and the price action should be getting tighter and tighter and tighter and tighter because they're working. There's fewer and fewer sellers, right? This is not tightening so far. That was a 23% drop. Another 23% drop. A 24% drop. Like they're not shrinking yet. Okay? Not saying this means it's going to collapse, but I'm not yet seeing the signs of go, ooh, this thing looks like it's getting ready to run. Because what I'm looking for is it's kind of like a spring, right? I want to see it compressing and tightening and just swishing up tight and getting ready to release that energy higher. That's the areas I'm looking for, right? Freeport, yeah. Love the stock, love the sector. I think copper's huge and they're going to do very well the next few years. But I'm trying to identify swing trades, stocks that I feel like could make a big move in the next few days or weeks. Like if you're looking at charts, okay, know this. A daily chart is supposed to predict the next 2 to 8 weeks of that chart. A weekly chart should predict the next 2 to 8 months. An hourly chart should predict the next 2 to 8 days, right? So I I'm trying to identify stocks I think can break out here and run for July and maybe August, right? And so I think it's coming. I like the company. If it was a long-term hold, I would not abandon it. It is tightening up, right? It is coming in. It got a little sloppy here the last couple of days. If it can come in here and tighten up, and yeah, absolutely, I'll be buying this thing. It doesn't look bad. It just doesn't look ready, right? Where are we with Jack? Again, Jack still sitting around here, pulled back to about 16. I am holding this as long as it's above $14 a share. I don't know what's going to happen. Now, if this were just a swing, if I didn't have a big macro thesis, if I didn't say, well, I think they're turning the company around, there could be a short squeeze. This could really turn into something. I'd just be taking the profit. I'd be like, look, I'm up 20, what, 22, 23% in a couple of days. Take half of it off or take 2/3 off and bring my stop to break even and let it run. You could do that. You probably should do that. But I'm going to see if this thing will run. I really think we can get up into the 20s in Jack. Anything on FISV? I mean, this looks pretty awful to me, right? The market is within 2% of all-time highs, and this thing is 80% off its highs. So, until I see signs of life, and it was looking, it was showing that it could be a possibility in here. It looked like it might have some life in it. It started to. It was coming in here, I mean, to shallow up, and if it had done this and broken out, I would have bought it there. But it didn't. It came in and made a lower low, and a lower high, and a lower low, and a lower high. So it's still it's still being distributed. I don't know anything about the company. I don't know what their earnings are, their sales, and I do not care until I see signs that this thing is being bought, is being accumulated. I'm not interested in it. Somebody said BlackBerry. Is that thing still trading? Is it BBY? What is it? No. Oh, BB. Wow. Who saw this coming? Not me. Okay, they must have finally done something. Now look at this thing here. See, it was in no man's land for a year and a half, 2 years, right? Nothing about that looked attractive. And then it finally got some legs. That's a 100% move in what, a month or so. 115, right? And then notice how I'll put this in a log scale. Notice how we then see that shallowing pattern I talked about, right? It's coming in, it's tightening up. See how these little pullbacks get very shallow. Can you see that? I'm not trying to Monday morning quarterback. I didn't see this. I wish I had. I want you to see that this happens over and over. There's the breakout. Can't get above 6.5. Can't get above 6.5. Can't get above 6.5. When it finally does, that's your cue to buy. And the damn thing doubled in a month, right? So, out of the last 2 years of BlackBerry's trading, the only place I would have considered buying this stock is right there. You say, why didn't you buy it there? Because I had no freaking clue this thing would go up. Neither did anybody else. I'm not trying to guess. I'm just trying to find these periods where I have some level of an advantage. Right? So, yeah, if you own it, good on you. Like, great. I wish I owned it. I don't. It's been a triple since April, which is fantastic. And it's just like if you're shopping for a house. You can find the perfect house, but the seller is on crack and asking 50% more than it's worth. You're not going to buy it, right? You could find a very average house, but it's crazy cheap. It's about finding the right house at the right price. And it's finding the right stock at the right point. So let's look at some of these areas here. The ones we identified earlier, biotech, quantum, airline, just take a look. Now, I've already built lists of these stocks. Okay. I saved them as watch lists in my trading view. I can share these with you if you want. Here's how I build these. And it's very, very simple. And let's take quantum stocks, for example, quantum computing, pretty tight list. Okay. Here's how you build. You're like, I think I see quantum computing leading. I want some quantum stocks. How do I know which ones to look at? Okay. Here's what you do. Type in the group, quantum computing, and the letters ETF. ETF's an exchange traded fund. It's a basket of stocks run by some kind of professional on Wall Street to give you exposure to the quantum computing group. All of these are required to report their holdings publicly. So the big quantum ETF, the Defiance Quantum ETF. Whoops, not what I want. Defiance Quantum ETF. See if I can find it here. I'll just type it in. Defiance Quantum ETF. Okay. We're going to go to their webpage. And they all report their holdings. See that right there? This is the stocks they own with the biggest one on top. You can hit view full holdings and see all their stocks. Now, some of these are not US companies. Okay, if the ticker symbol is 34332TT, that's Chinese or somewhere in Asia. But HQ, ARQQ, QNT, and I just build these into a list. Astera Labs, Applied Materials, RadNet, BTQ, MKSI, right? Just add them. And now you've got this watch list of quantum computing stocks you can quickly fire through. And so all we're doing is, do I see anything in this chart? No. This one, not yet. Rigetti, no. There may not be a buy here. Now, IonQ, you might say, okay, well, I've got a bit of a high tight flag going. I might buy this if it breaks through that little retracement area. It's a bit of a stretch. It's deeper than I'd like, but maybe. QMCO, might buy this on a pullback if I really wanted into quantum. See how you had this consolidation in here? Massive run up from there, pulls right back to it at the 50-period moving average. Maybe we're taking a stab at QMCO here. Not my favorite setup, but it's possible. Astera Labs, monster. Set an alert. If it touches the 20-day, I want to buy it. Applied Materials. Not loving any of these right now. And this is the hard part. The hard part is going, I know what I want exposure to, but I want to wait for the right setup. Let me go and look at the biotech names. Excuse me. Okay, might keep an eye on this one. Now, I want to see it absorb a little bit more. It's coming in to form a bottom. It's down. It's up big, right? That's good, but it's getting extended. It's up 32% in the last couple of weeks. So what do I want to see? I want to see a little final absorption in here, and then I'll be buying the breakout if it happens. Natera is surging. Moderna. And as you get an eye for these, you start to know what you're looking for. You can pepper through 100 stocks in about 10 minutes, 5 minutes. Most of these aren't looking great. INSM may be forming a bottom in here. See if this one can put in a little more, put in a couple more days tight. This is not perfect, but you could make a case for this. Kind of breaking out through the highs. Trying to find something better. Could be a decent pullback buy here in Amgen. And look, this is all I'm doing. Okay. Rips higher, pulling back today. If I bought this here, shouldn't fall more than 3-4%. Because that's the pullback area I want to find. So I just come in here and say, all right, it's kind of in a pullback area. I'm going to pick up 100 shares at, I'll split the bid, 363.25. I don't think it should get below 350, right? The last little kind of 354, really, kind of right in here. So I just go ahead and put a stop loss and say 352. Set that good till canceled. This up a little. Buy some shares, see if I can get them. All right, so I'm long 100 shares of Amgen at 363.46. Now my bet on this is not a great trade, but it's potentially something. Comes in, breaks out, little retest. Let's see if it'll bounce here. If it's going to bounce, it should hold. Look, it should hold these last few days of consolidation, right? It really shouldn't get below there. In fact, I could even trade this thing a little bit tighter and bring it up here to kind of 355 half type area. And I don't need to risk a lot of money on this. I mean, I'm long for 363. I'm risking a whopping 2%. Lottie freaking da. And if it runs, it should push me back up into here, 6-7+%, which is a 3-to-1 risk reward. So you can really take a massive position here in terms of percentage of your capital because you're only risking 2%. Immunivent. Kind of a fire setup here. Big move. Nice tight little action to the top. Could buy a breakout above 39 and a quarter. Vertex is already running. But do you see the breakout down here? This is kind of what I'm looking for. It's just, it's like, am I going to get lucky and find one in the 30 minutes we're live together Monday morning? But I'm doing this all week. But you can see how it kind of comes in, little loose, comes in, tightens up real nicely. See how it can't get above whatever this is, 455 ish? See how that's resistance, resistance, resistance? Here's where I want to buy when it breaks out. And if I bought it there, my stop loss is right here, right below the last swing low. So you've been buying here with a whopping 4% risk, and you'd be up, 12 to 14%. And that's what it's about. It's about what you're making versus what you're risking. Either you're risking 4 to make 14, you're risking 15 to make 40, you're risking 50 to make 200. Whatever it is, you need to be targeting a gain bigger than your risk. It's called getting odds on your money, as Minervini would say. Now, do I want to buy it here? No, of course not. It may very well go higher, but this stock is up 20% in the last couple of weeks. It moves on average 2.7% a day. So it's 8 to 10 ADRs above my buy point. Like I let it run or I'll wait till it consolidates again. The biotech list, I can share it with you. Hold on. Oh, here. Share list. Copy link. Can y'all see this in the text? In the chat? When I type that in, can everybody see that and click on it? Let me know if you cannot. I'll have somebody on my team post it there. But if you do this for each of the major groups, you'll have all these lists and give it a couple of months. You could do it all in a day if you want. And then anytime you see a leading group, you'll have a list of stocks to fire through. Biotech is it's the biggest group. Most stocks, you're going to have 10 to 20 names on each one of these. The biotech list, you're going to have 80 or 100. The moving halo here. Again, you can kind of see. And usually when a group is getting hot, you're going to see a lot of setups with a very similar pattern at the exact same time because these groups tend to move together. But you can see that move here. So here it got a little bit ahead of itself, but it wasn't ready anyway. And here it tightened up nicely. And there's your buy point. You get that nice little acceleration higher. This is what I was looking at for AbbVie. Now, it didn't hit the buy point, right? It rolled over instead. But we were looking at this back in November of last year. Okay, fast forward all the way to here. And notice how that level again became resistance. Again became resistance. And then it stalled there. Like these stocks have memories. Now, I'm surprised Biogen's not running better because this one looks really, really clean. Beautiful uptrend. Nice 3-month consolidation right in here. Nice and tight. Breaks out beautifully. We got this big day right here where it ran 7% on above average volume and is then kind of stuck there. So I would have expected this thing to be at 240 by now. They're not all going to work perfectly. So at this point, we're going, all right, I bought here. I'm bringing my stop to break even. If it doesn't run, I'm out. I'm not going to risk any money. This was a monster. Now, this is one where it wasn't perfect against a resistance, but you can see that same structure forming, right? See how it was a 25% dip, and this next one was about 11%, and then this next one was like 8. See how they're getting shallower and shallower? It was kind of drifting up, right? It was kind of drifting this way, but it's that same idea, that same pattern. It's the tightening action that we want to see, that's being absorbed, that it's consolidating, that the strong hands are building positions. then it accelerates higher, right? Look at the airlines just in case. This is not typically a super sexy group. I haven't even figured out why airlines are ripping right now, but they are. Now, this would have been a pretty decent entry into United about a week ago, where you see that big, it's kind of a cup with handle tightening type pattern. See that? These are all a bit extended for my taste. Southwest, very similar. Big drop, comes in, shallows, tightens. See the resistance. Helen Keller could have spotted the breakout here. That's where you buy. Now, JetBlue, which I think is a piece of garbage for a company, is actually setting up. This is beginning to consolidate here. And it's actually a decent mover. The stock moves about 5.5% a day. Look at other volumes kicking up. See the higher volume coming in here at the end? Right there, pushing into the highs. Sorry, I'm just thinking here in my head. 2%, 19, 13. It's a little looser than I want. Like ideally, that last dip, I want it sub 10%. That's what I want to find if I can. I may not get it. Well, the gate pretty strong. So if I bought this, I'd want my stop loss here, which is about a 13 or so percent risk, more than I'd like to take. But I have a leading group. I have one of the top stocks. There's not a lot of stocks in this group. Um, it's showing me consolidation. It's trying to break out. I'd really like to get it above the highs here, but it's possible. You know what? I'll take a baby trade. Let me just take I'll take this to the market. Let me see, like 3,000 shares. I'll take two. Be a little trade. And my stop loss, I want just beneath this low at 540. So I'll put it at like 5, call it 38. I'm going to set this to good till canceled. And I'll buy 2,000 shares of JetBlue. Now, as we step out, this thing has been in consolidation for quite a while now. It's not the cleanest pattern. Like I'd rather this be setting up at the highs, but it is a leading group. And it is getting shallower and shallower and shallower as it comes in. So I've got a stop loss down in here. Let's see if this thing can run. I'm risking a little more than I prefer on this one, but I want to put something on so you can kind of see the process here. Excuse me. Oil and gas. Yeah, I mean, it could just be that. Yeah, it could just be that oil's coming down and there's relief in these stocks. It's the case for that is a little bit hard to me because the Iran situation started here, right? And that's when oil was at $67 a barrel. Well, now it's at 70. So it's kind of back where it was. Yet these stocks are up 50%. So I think there's something more to it. I haven't quite figured out what it is. Usually it kind of makes sense. Copper's running because we're building all these AI data centers. They all use lots of copper and steel, et cetera. It makes sense. Chips are running because there's massive demand for these semiconductors and for the DRAM and for everything else. Like makes sense. The airlines one's a bit surprising to me, but you know, I'm not going to fight the trend here. Somebody said SpaceX. Now, SpaceX tomorrow joins the NASDAQ 100 index. as of tomorrow morning. What that means is all of the passive funds, the QQQs and the target date funds and the mutual funds and the ETFs, all the ones that track the NASDAQ index have to buy SpaceX stock tomorrow morning at the open or either at the end of the day today, tomorrow at the open, or tomorrow at the close to balance out, right? So that's going to be a few $1 billion of forced buying that's going to come into this stock. So that's a big tailwind for it. Now, there's a handful of key dates for SpaceX, and I'll put them up here on the chart. This is pretty much the last positive one. The Russell's going to be pretty small. It says July 6th. I was wrong. It's actually, well, it's July 6th at the close. I think this should be July 7th. Okay. But the big thing for SpaceX, again, it's all about supply and demand. This stock is massively overvalued based on its sales and profits today. It's trading at 100 or 90 times sales, not profits. That's insanity, okay? But if everybody is buying it like everyone wanted it when it IPO'd, it still went higher. It could be trading at 1 time sales, but if everyone is selling it, it's going to go down. So don't let the fundamentals overshadow. Just know what's going on. But the big supply events are happening with these unlocks. And the unlocks are where the insiders and early investors can finally sell their shares. So if you bought SpaceX in, round A or round B or some early funding round, when the whole thing is worth $50 billion, and now it's worth $1.5 trillion, well, you're up 20, 30x your money. Whether it's at 170 or 160 or 210, like they're up massively. And so these insiders and early investors could not all sell on the day of the IPO. There's supposed to be a lockup phase. And instead of having one hard date, they're kind of doing this in tranches. So on August 20th or mid-August, after 2 days after the second quarter earnings report, 20% of the float, 20% of that 1.7 trillion can be freely sold. They're not all going to sell the first day, but a lot of them, like I said, they're up 20, 30 fold, they're going to sell. If that stock is above a certain price, I don't think it's going to be, but it's got to be above 160 or something like that. If it's above that price, another 7% opens up or 10% opens up. And then there's some rolling tranches through here where another 7% unlocks, another 7% unlocks, et cetera. And the Q3 earnings lock, which is going to be like first week of November, another 28% opens up. Then the full lock open up comes here December 9th. So over the next couple of months, there's going to be these periods where all these people are free to sell. And that's just going to create huge amounts of supply. You're talking about hundreds of millions of shares. Suddenly they want to cash out. Some of these are welders at the company who got shares as part of their comp package back in 2023. Some are investors, some are private equity. It's people who are up huge. And so you have to know that selling pressure is coming. Before this thing IPO, this was my prediction. I said, I think we'll hit 200 a share. It went even higher to 225. Notice it's trying to hold here at the IPO opening. That's going to give, I believe, July or August. I think you'll probably see it do something like this. I think you're probably going to see SpaceX temporarily hold up here in the NASDAQ inclusion. That's going to be over. It's going to whittle down. The big unlock's going to happen in August. I think it's going to come down and stall around this 135 IPO price. It may get a kick, and then it's probably going to do something like this. And then, the future is the future, right? Then it could come in and finally come and bottom out and maybe begin this multi-year trend. I do think SpaceX can be worth substantially more 10 years from now. I'm not knocking on Elon of this company, but today's price doesn't make a whole heck of a lot of sense. So if I were a betting man, I would say you're going to have a chance to buy SpaceX at $100 a share at some point in 2026. Don't shoot the messenger. Listen, nobody can do what Elon can do. If I'm going to follow anybody, it's that guy. I'm not betting against him. I'm betting that the stock is not worth $1.5 trillion today. It'll be worth it in 2029, 2030, 2031. It's just not today. So that's what I think we're probably going to see with SpaceX. TripAdvisor, kind of a backdoor play on airlines, but starting to look pretty strong here. I mean, it's up 50% since May. Nice little trend. Notice how, again, these numbers show up. Support, support, support. It breaks down. Now it's resistance, resistance, resistance. Okay. Notice how these dips have gotten small, like this little handle right here. Like this thing looks like it wants to run, and it's probably going to 18. Okay. Tell me about Redwire. The reason I ask, and I have nothing against Redwire, I get more comments in my videos and questions about this stock than any other. And I don't think I've even ever done a video on it. I don't know the retail interest in like where's this coming from? Is it a trending thing on Reddit? Is it like what is the deal with Red? Why is everyone so bullish on Redwire? Like I'm not making. I just don't know where this is coming from. I'm not kidding. I hear more. I get more questions about Redwire than SpaceX, my YouTube channel, and I don't understand where the interest is. I mean, the stock's down 57%. I wouldn't buy this thing with. I mean, well, I take that back. Maybe pullback into the last acceptance area, right? If you're going to buy it, maybe in here. But like this stock's been getting murdered since mid-May. I'm not trying to catch a falling knife. Um, Yeah, minimal sales, roughly 100 million a quarter. Well, that's not minimal, I guess. They're just not profitable yet. Felix and Friends. Okay, is that what brought this thing out? I mean, yeah, it's that was a great run in May. What we saw leading up to the SpaceX play was that all the picks and shovels space stocks made big moves. We made money on a bunch of them. We did several. Because that was the trend at the time. It's not about that they're suddenly profitable. That's where the demand is. Everybody's talking SpaceX, SpaceX, SpaceX. Everybody wants exposure to that area. And SpaceX wasn't public. So they're buying all the backdoor plays. But then as soon as SpaceX went public, which was, here on June the 12th, right leading into this, look what all the space stocks did. Look at what they've all done since the SpaceX IPO. Every single one of them has been murdered, just like I said they would be. Viasat is not. It's come back. Took its murder. Something must have happened with this one. Garmin is off. Siri's holding up okay. Trimble's getting murdered. Firefly Aerospace has been cut by 2/3. Global Star, I think, got bought out. Lunar has been absolutely killed, although this one, again, like the other, could be a nice little buy right in here. It's not a coincidence that they're all coming down. What happened was the supply suddenly increased. The number of shares for sale increased. Why? Why would there suddenly be a bunch of people selling these space stocks if they're all gung-ho on SpaceX? Who can tell me? Because they're freeing up money for SpaceX. SpaceX is what they really wanted. So now finally they can buy it. Well, where's that money coming from? They're pulling out of the mattress? No. They're selling their rocket labs. They're selling their Planet Labs and their AST Space Mobiles and their Echo Stars. They're selling these stocks to free up capital to buy it. They want the real thing. Now, somebody mentioned Rocket Lab. Again, this is not like a perfect pattern, but if I was looking for a place to buy Rocket Lab, this is that pullback, those pullbacks I talked about. See how you got the big acceleration, the shallowing, kind of cup with handle consolidation. There's your breakout from 90. That's a 50% move in a couple of weeks. It pulls all the way back right there to that breakout area. So if you're looking for the pullback, this is the place to buy it. Intelia. Yeah, I like it. It's not perfect. I'm surprised it didn't run harder. I like that it's coming out of this, 6-month consolidation period here. Hopefully, this is the start of something. We did do this one, an insider back in here for that big run. Um, Use case for RDW infrastructure. We need a space. Okay. All right. Listen, Redwire might be the stock of the decade. Please don't take this as Ross hates Redwire. I just was genuinely curious where all this retail interest has come from. Integra Resources. No, I mean I wouldn't want this. Look, let's just map it. Okay. Let's go back in time. Huge run, consolidation. There's your breakout. That's going to be my pullback point if it comes to it. So you bought the pullback, beautifully done, but it gives it back. Now it's below it. Now that is resistance. And since then, we've seen lower lows, lower highs, lower lows, lower highs, lower lows. This is distribution, not accumulation. This is selling, not buying. Might be the greatest company since Microsoft. I don't know. But investors don't want it right now. We mentioned the space stocks list. Sure. I'll share this with you if you want. And by the way, if you haven't already, make sure you were signed up for that Black Ops membership. Just go to tradewithross.com. It is just $5 for the entire year. And you will not get a better $5 value anywhere on planet Earth this year, I guarantee you. Okay? Just go to tradewithross.com or scan that QR code or click that link. It's going to take you to this page with a lot of cheeseball stuff on it, but don't worry, all the value is the same. It's $5 for the whole year. Okay? I'm going to provide these 3 in-depth bonus reports. You'll get these live sessions with me every week for an entire year, just $5, the whole year. Another live session with my analyst every Thursday, my newsletter every Friday afternoon. So name, email, phone number, credit card, complete purchase. It is $5. There are no strings. It doesn't even automatically renew. You're not even going to get dinged for $5 come July 2027. So there are I get so many comments. What's the catch? What's it renew at? Like, it doesn't even renew. I'm serious. It's just $5. I'm not getting rich off this. I'm not making any money. We do have more premium trading services we offer and we sell at higher prices for our clients. But the goal of this is to show people how to attack the market, a methodical approach to finding winning stocks and winning groups, taking small risks, getting big upside, and give you a framework to do better. And if you don't get $5 in value, I'm not kidding. Send me your address. I will put a $5 bill in an envelope and mail it to you. I promise. I think we've had one person ask for a refund in a year. RX site. Yeah, Recursion. Yes, I agree. Who mentioned this one? Ava. Yeah, it is absolutely trying to form up off the bottom. I agree. This is a biotech name. Perfect. We didn't quite get to this one. So it's still tight, but then coming in, starting to shallow. Yeah, I agree. Looks great. So where would you buy this? You buy it on a breakout above 405. Your sell stop is going to be whatever the low of this action is. Okay, so if it comes in and does like this, and then breaks out, your stop loss is going to be here, whatever that swing low is. And that's the whole premise of this, is being able to keep risk small. And if we go back and look at, I'm just going to pull SanDisk. I'm not trying to cherry pick. Well, let's just go back in time. Oh, that's like it's the same for any of these. I'm not trying to pick a winner. Okay, but I just want to show you an example. The beauty of this shallowing is once it comes down here and recovers, it should not go below there again. The next dip is shallower and comes back. It should not go below there again. Comes in, should not go below here again. Should not go below here again. So when it finally breaks out, whatever that last swing low was, That's where I want to put my stop loss. And ideally, I want this to be less than 10%. On a very fast moving stock like SanDisk that moves 9% a day on average, I would be willing to go to call it 15%. But that's the whole. So when you find these breakouts, try to put a stop at that swing low. That's the kind of point, that's the line of the sand that says, if it goes below this, I was wrong, something's changed, it's probably not going to work out. If it's too big, just set it at 8 or 10%. You do not need to risk 20, 30, 40% to get these big moves. You don't need to. That's only if you're just throwing darts and crossing your fingers and hoping you're not getting in at the top before a massive pullback. Vera for tomorrow. Yeah, when is the date on? I think this is, I have to go back and check my research. I think the news is coming out soon, or the date on Outlook. I don't remember that one either. Both these have. All right. Is that right? Oh, the Outlook fall apart? No. Is this right? Doesn't look right. Oh, I'm on the replay. Hold on. Sorry, I'm not looking at the right data. Okay. Yeah, both these have imminent FDA disclosures coming. Outlook's July 29th. Okay, so you got plenty of time on Outlook. 10% based on what? 10% based on where you buy it, right? So if I bought Rocket Labs here, okay, what I mean is if I'm buying on this little retest, let's just call it, okay? This is just kind of a stab in the dark, but we'll just say, all right, I'm buying it here. Well, the low where it bounced from is here. So it really should not go below there. That's where the buyers finally stepped in. So if I bought it here and my stop loss was there, that's an 18% risk. I bought at 98, sell stop. I don't want to risk 18%. So I would just say, okay, what's 10% below the current price? Well, it's like right here at about 88.90. So if I were buying this, I'd be buying it at the market and I would put a sell stop in there at 88.90. And what that says is if you place this order, if Rocket Labs falls to 88.90, if it hits it even for a moment, sell it all. Don't call me, don't email me, sell it instantly. It's a standing order, a sell stop order. And so what that does is allow you to limit your risk. Unless the move happens like overnight, then it gaps down and just sell it first thing in the morning. But it allows you to say, that's all I'm willing to risk on this. I can take an 8% loss or a 10% loss. I'm not willing to take a 30 or 40% loss. So that's what I mean when I say, risk 10% or risk 8% or whatever. Stock of a lifetime, Mikkel says. ADURO. Whoops. Aduro. ADUR is the ticker. Okay. Doesn't look bad. I mean, kind of blur. Let's look at a weekly chart, see if it looks any cleaner. It's not bad. A couple of premature runs here, but it's kind of putting in that standard cup with handle type pattern. This is the stock of a lifetime, huh? What's it worth? 500 million. Small cap name. All right. I'll look into it. ADUR. Mikhail, if you see a video on the stock for lifetime, I'll credit you. Excuse me. LAES. So again, love the company, like what they do. Stock looks a bit early. Kind of thought we'd break out through here, but look what happened. We came in, we tightened up, we broke out, ran to the supply, and sold it off. So doesn't look bad, doesn't look good. It just doesn't look like it wants to do much of anything. But I want to see some consolidation near the highs. in LAS to really time this one for me. Robinhood. Love Robinhood. We talked about this one a couple of weeks ago when it was at 93 as a potential buy. I like the story here a lot. Now, I don't trade on Robinhood. Okay. I know a lot of people do. I don't like it. It's a little bit simpler than what I'm looking for, but a lot of people do. Anyone under 40 probably has a Robinhood account. They are getting into banking. They're setting up credit cards. I believe Robinhood will be the Charles Schwab of our generation. I'm 43. I'm like barely millennial, but I think that me down is going to be a Robinhood generation. So I like that. And then what do we see technically? Do you see why I drew a line right there? This is a perfect example of everything we've talked about today. See how it comes in, and then there's heavy buying, and then it shallows, and it shallows. Do you see why this was the breakout area? And then it runs from 95 to 111, pulls back, perfect retest of that area, and is going from 95 to 115 in the last week. I bought this one before in our Alpha stock service back over here on a very similar pattern, although it was coming off the highs. Notice the consolidation, see the breakout. It then went into stage 4. It rolled over. This happens. Every stock is going to go through these periods. It falls 55%, rounds out across the bottom and starts getting legs. So, yeah, I think Robinhood looks phenomenal. But is a great, does this make sense? Like, can you see how we're putting all this together? Miracle Technology. Urge everyone to look into it. Again, thank you. Mikhail, you got it, man. Am I saying your name right? Mikhail XO1. All right. What about Jack? I'm holding Jack unless it comes down to 14. Pulling back today. We'll see what happens. I'm willing to risk what was up 10 grand this morning. I'm willing to risk that. And typically what I'll do when I buy a stock, I get a nice 15, 20, 30% move, I'll sell half. Okay. I didn't do that this time for a very simple reason. This is a thinner traded stock. I believe the initial move was partly in play because of the video I did addressing it. It was also added to the Russell indexes, which caused some forced buying, but I didn't want to do anything that people go, oh, he's pump and dumping. He's driving it up and selling it. I see these whiny little people in the comments thinking I'm out here manipulating the stock market. Give me a break. We guy in South Alabama, okay? I got a 3-year-old. I'm not out here manipulating the stock. I don't do that. So I didn't tell any, just so that nobody could say anything. So my stop is at break even. I'm willing to risk it all. Now, if we get a secondary move and we get up into the 20s, know this, I'm going to sell some, okay? But this is my target. I have no risk on this position anymore. My stop loss is right there at break even, meaning it's going to sell at the price I bought it if it falls to there. I'm trying to let this thing get through, but I'm looking for a second move like this. We'll see if it happens. But you have to make that decision on your own depending on where you bought it. SoFi, beautiful. I think you got a beautiful bottoming action here in SoFi. See how we're getting that? Again, this is when you want to get them. So see, look, we bought this over here. And it's the same pattern to the highs or the lows. I'll put this in log scale to smooth this out. Same pattern. Big move up, needs to come in, absorb, swallow that supply, and then it doubles, right? Same thing on the bottom. It's all about supply and demand. If the demand is in charge, if there's more buying than selling, it's going to go up. And vice versa. What's there been? More supply or more demand? More supply. I don't know why. For whatever reason, they're selling. I don't care why. The sellers are in control. So until they're done selling and the demand steps in, until the buyers outweigh the sellers, it's going to keep going down. And so what does it look like when the buyers step in? Well, demand comes in and big pushes up and the dips are smaller and the pullbacks are lower, right? That's that shallowing pattern I want to see. And this looks perfect. So I think, yeah, a breakout in here and you're targeting a move probably up here into somewhere in that like $27 to $32 range, which from here is about a 55% target. So where's my stop loss if I buy it here? Well, ideally down here to swing low. which is about 11%. So if my risk is 11% and my target profit is 55%, then my risk reward ratio is 1 to 5. Now, what does that mean? If I'm trying to make $5 for every $1 of risk, what does that mean? It means as long as I'm right 20% of the time, my account does not go down. If I'm right, 1 out of every 5 one of these, I don't lose any money. I can be wrong 80% of the time and never lose money. If I'm right 30% of the time, I'm profitable. 40, 50, I'm making silly cash. So always look at it in terms of risk reward. Day traders are doing the exact same thing on a 1-minute chart. What's that big, man, a day trader went out, let me see. What was it? Shoot. I can't think of what it was. Big move. Anyway, it was the exact same pattern on like a 1 or a 5-minute chart. Let me see if I can find one in here. Here we go. Look at the 5-minute chart of SoFi. Who can see it? At what price should you have bought SoFi? Put it in there in the comments. Give me a price. Pop quiz time. At what price should you have bought SOFI? Give me a number. Anybody? There's a bit of a lag when I ask and you type it in, so I'm going to wait for your responses here. But this is a perfect pattern. 18, 18, 18, 20. Yeah, I would say 18, 20. It came down. It's going to sell until demand comes in. It shallows out. It tightens. It comes in. I buy right here. My stop loss is right there. So my total risk on this trade from where I buy to where my sell stop was 1.25%. And it went up 4.5 in 20 minutes. So you could have just said, I'm going to do 3 to 1 or 4 to 1 or whatever. I risked 1.25. I'm up 4.5. That's 3-4 times my risk. I'm out. It's the exact same principle. Whether you're trading a 5-minute chart or a daily chart or a weekly chart or hell, a monthly chart. You want to get your mind blown? Wait till you see this. This is gold. Hadn't been a fun year for gold, but where did the big move in gold really start happening? The big breakout in gold started right here, right? First quarter of 2024. It's choppy, 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 choppy. Then it starts going for a run. Okay. Now, this is the newsletter. It's included with your Black Ops membership. Here on April the 12th, 2024, can you see that date? April 12th, 24, I sent this to our members. So this is the start of a gold super cycle. And I showed them this chart with that same pattern. Gold is at $2,200 an ounce at the time. Now, look at how this thing lines up. Okay, let's just go back in time. Let's start with a daily chart. On the daily chart, you can see big move up, shallowing, action, right up here, breaking out at 2,100. Okay, makes sense. It's trying to figure out the next 2 to 8 weeks. There it was a nice boom. Okay, weekly chart. Each one of these candles is now a week. Look at this. Over the last 5 years, had a big run up in 19 and 20, big shallowing, got a little deeper, tightens up, getting ready, all breaking out here at the exact same price of around 21, 2,200. So that's targeting a move for the next 2 to 8 months, right? Would have taken you into late 2024. Now let's get crazy and go to a monthly chart. Each one of these bars now represents an entire month. So we're looking at about 2 decades of gold prices. And you're going to see the exact same thing. Big run up in early 2000s, massive 15-year shallowing base pattern, all leading to a breakout at 2100. And this is how that played out. That's going to be too slow. Let's just get out of here. That's what happened. Okay. So it's the same process. It's the same fundamental supply and demand. It's the same principles of identifying these points where demand is very high and supply is very low. That's what leads to these big accelerations. And you had all the time frames lining up. The fundamental story was clear. We're coming off of record inflation. Our government cannot stop spending money no matter how good the economy is. They have to just give it away to pay for, sex change operations for New Guinea sheep or whatever the heck they pay for. We give it away to other countries. It's insane. All that money printing to fill the gaps caused inflation. Central banks across the world are buying gold in record numbers. It's gone nowhere for 2 decades. Everything lined up. And that's when you put your foot on the gas, when the story and the fundamentals line up with the technicals. When the chart is telling you what you're seeing and the story is good and the earning, like when it all lines up. And a lot of you have mentioned stocks today. And I said, look, I like the company, I like the story, I like the numbers, but the chart doesn't look good. We've seen the chart looks great, but the company is kind of a piece of garbage. But when everything lines up, that's when the big money is made. And that's when I would encourage you to really get aggressive. And if you go back here, look, I'll show you this last one here. Let me show you this thing in NVIDIA. I know it's like, oh, NVIDIA. Yeah, no. Let me show you what I mean here and how this can make you money, okay? This is NVIDIA in January of 2024, okay? So think back to just 2 years ago, 2.5 years ago. Everyone knew NVIDIA was a number one stock. Everybody. It was up, 250% in the last 6 months. Everybody knew AI was the big story. If you went and looked at this, it was semiconductor, clear as day. This was not a secret. You didn't have to get in early. And then look at how it forms that exact same pattern here. Textbook. Ray Charles could have spotted the resistance. It cannot get above $50 a share. When it does, you buy it. And look how that played out. Now, this is a $1 trillion company. Trillion. It's not a little guy off the radar. It's not something you had to have great insights in. It's not something anybody didn't know. And you buy it there, and your risk, you bought it here, your risk was 6%. You risk 6% on the most obvious stock in the market because it's in the right group at the right time. The story's good. The technical pattern's good. And you damn near doubled your money in about 2.5 months. This is the way. Okay? Now, the tough thing about these Monday sessions, everybody goes, trade, you bum, trade, buy something, buy something, buy something. And I try, right? We're looking, I'm hoping I come in. Sometimes we do. We find great ones out of the gate that meet all our criteria. But I don't want to just force stocks for the sake of trading something. I want to show you what it is you're looking for. And the more examples I paint for you and you see this over and over and over again, the more you're going to believe it and the more you're going to spot this when it pops up on your chart. So follow this process. Stay focused on the leading groups in the market. Put them down on a piece of paper, just like I did here. Jot down your top 3, 4, 5 areas. Just really strong. It doesn't be that you don't pick the perfect one. Just pick 4 or 5 strong areas, okay? Go do your homework. Just Google those ETFs or those names. Put together a list of 40 or 50 stocks. And we did this before. We come in and go, all right, what's our watch list? And I'll just build a watch list. Looks like this. This was from April of 2027. Now, April was here. Okay? We had Intel. We had iHeart Media. We had the magnet chip semiconductor. All this was in April. Okay? Atom. Here's April. Watt. Here's April. Okay? This one didn't work out. OSTX. Fuel cell. In April. Right? Now, I haven't looked at this list in a while. But this is what we did. We got together one of these live sessions, said, okay, what are the leading groups? And we picked 3 or 4 or 5. We then took the top 10 or 15 stocks from each one of those groups and we built this list. And you probably could have bought the whole thing and made a massive amount of money. But we then take that watch list and look for these setups, either breakouts or pullbacks. Javel was a good one, kind of right in here. You got a nice strong uptrend. It comes in, it shallows, it tightens up, breaks out in a gap, and it's gone. Right? So follow this process. I can almost guarantee you will find more winning stocks. Hims, yeah, I like this company. They make big moves because they keep getting these deals with pharmaceutical companies and then violating those deals and getting in trouble. Now, this does look really nice off the lows. Exactly what you talked about. What we talked about. Nice consolidation comes out, boom, retest off. Yeah, Hims looks phenomenal. Looks great. It's a mover. Be careful, but yeah, great stock. All right, guys, listen, we could go on all morning, but I want to cut this off here before we get too long. If you have not already, make sure to go to tradewithross.com and get signed up for our Black Ops membership. It is $5. That's it. You should have got $5 value added today. I'm going to give you 52 more weeks of this for the same $5. Scan the QR code, click the link in the description, tradewithross.com. You'll get the live weekly sessions, 2 a week, me and my analyst every week for a year, my newsletter every Friday, the industry strength indicator, bonus reports, access to my support team, tons and tons and tons of stuff. Just $5. I encourage you to sign up. And if you're not for some reason, make sure you subscribe to the channel. That way you'll see these videos as they come out. But I appreciate all of you joining us this morning. Had a good time talking with you, and I look forward to seeing you all next week. Thanks, everybody.